Welcome to another AriasWave update. So in this video, we're going to talk about Bitcoin's short-term price action. Now, I've heard a lot of people say that Bitcoin's going to bounce to 25,000. That could be true, but not in the short term. And when I say short term, I mean days. So at the bottom of this move, which is, I believe, the start of wave 3, right? We know that markets move not that fast during corrections. So, in my opinion, this first move since that low on the 19th of June has been a wave A. Okay, so how can we trade this in the sense of spot trading, futures trading, that kind of thing? Using leverage potentially. Um, you need to be really careful when you do that. I'm not a financial advisor, but I have decided to go back to my roots, which is some futures trading and short-term price action trading. Just whilst we're looking at some slow price movement in these markets. Now, AriasWave was built upon a futures market, right? So I used to trade the euro, Aussie dollar, Dow Jones, a whole bunch of different things just using the patterns. And that's where I came up with AriasWave during that period of time when I was looking for something that really wasn't available at the time to give me any kind of indication as to what's going to happen next. So I'm just going to give you just a small little uh, sort of insight. And it's kind of timely at the moment just because of this pattern unfolding. What comes after A is a B wave. Okay, so we're looking for a B wave probably down to the lows roughly. And how it gets there, well, it can take time, it can be quick, you just don't know. So looking at the first move that happened down from that uh, end of that zigzag, first of all, we've got an A wave, okay? And then, minimum expectation, you need about a 0.618 retracement. Even a 0.5 or 50% retracement will do. But the point is that you need to get a similar length of the A wave to come down to, at least create that zigzag for wave C. Now, that can happen after you see certain things happen. Now, this could either be already completed correction or it could be part of an ongoing correction, which will eventually produce that move down to that level. Okay. Now, you might think that it's not a big trade, it's not a big deal, but when you use leverage and you know what you're doing with the markets, this type of trading can actually be quite effective in the short term, right? Because obviously, if you know anything about leverage, you can really increase your returns, but you can also increase you know, your losses. Okay, so you got to tread carefully when it comes to this. That's one of the reasons why I recommend learning AriasWave. It's because you get to understand how these markets work every single time they produce the same pattern, okay, especially during corrections. So at this point in time, it's pretty straightforward. We've had a 5 wave move down and we're looking for the C wave. Now, before we get okay, so I've already mentioned that. Now, if we just move and zoom in closer to this. Now, I'm already short this because it's given me a pretty good pullback since that 5 wave move down occurred. So for me, it's a matter of understanding what is this pattern that's going on. Okay. Now, here we could see potentially an A wave. All right. And then might see a bit of You know, a B. Sorry, one sec. So let me just fix this up so I don't drag everything everywhere. All right, we could see a B wave, a C wave, a D wave, E wave, and then you can get your move, right? Which would basically, be roughly the same length as wave A. Now, usually I tend to measure that from the end of wave E, but instead of doing that kind of thing, you can just go from the highest point in the retracement, right? So, in other words, you can just take the length of wave A, the highest point, and it'll be roughly similar, or depending if the correction of the B wave in brackets expands to the downside, you may get a bit lower, but we're dealing with probabilities here. So any kind of movement to the downside will, get you some profits. Stop is always excuse me. The stop is always above the start of the zigzag. Okay, so yes, this is a short-term move, but you get many zigzags in a correction. You get three. All right. So the first one is, you know, obviously the hardest. The second one probably easier, which is this one here. The second zigzag in a correction is a B, and most likely you'll get that kind of move happening. Okay, so regardless of how it turns out, the point is that you're going to be making money from leverage. You don't own the underlying asset. Instead, you're taking a bet, right? You're taking a bet, and instead of that money sitting on the sideline because you're waiting for a bottom in the markets, you get a chance to short Bitcoin in this example, right? You can do it with many other cryptos as long as you understand the pattern that's occurring at the time. Okay, now once this pattern completes and then we start to get a reversal for wave C, well, you can trade that as well, but you're going to need obviously some expert analysis going on there. But like I said, all these things they do carry a level of risk, so it's best to understand. Excuse me, I'm still getting over this cold. It's always best to understand the patterns, so therefore you can make the right kind of decision and not just be gambling. Okay, so at this point, I'm going to keep tracking this one. This is I'm going to call it the Bitcoin spot trade, futures spot trade, whatever. And I'm going to be tracking this price movement to the downside, just to highlight the value of AriasWave and how it can be used to predict, small movements in the market, and they all form part of the bigger picture, the bigger correction. And now we're sort of getting a little bit in depth when it comes to analysis, right? And that type of thing can, help you out in a bear market when things aren't moving, much at all to the upside. It's not just a case of hodling. So obviously, since my last update, where I've changed my view and come to the conclusion that we are looking for more downside, probably some significant downside. Well, what do we do during this time? Do I just stop posting videos because no one likes doom and gloom? No, I thought maybe I'll just just do some short-term trading, and the best way to do it is using leverage. And mind you, even if you do open up like for example, I use Binance. Even if you do open up a futures account, right? You don't have to increase the leverage that much. You can even just have a one-to-one leverage, right? Or you can jack it up to 5 or 10. The max I think is like 125 or something. That's pretty crazy stuff, right? Like you've just got to excuse me again. You've got to know what you're doing in order to do this sort of thing. Okay. Sorry, I'll just take a drink. Right. So yeah, so at the moment my target is back down to the lows. The lows of about 17,600, that'd be good enough for me to take a profit and then wait to see if the pattern looks complete and then look for a reversal for wave C. Now, the wave C could be the move that takes us back to 25,000, right? Because what would 25,000 mean? Okay, so if we're looking at a 1-2, 1-2 pattern, right? Let's just take a fib to this so we can try and understand why, for example, Gareth Soloway thinks that that's the case. At this point in time, I really don't see it being 25,000. It could even be up to 29,000, right? That's a very shallow retracement anyway. That's like 0.38, right? So, it wouldn't be too bad if you catch the move and then wait for a pullback, wait for the first half of the next zigzag before you do the same thing again, right? And then wait for the zigzag to complete, wait for the E wave and then break below it, right? And then we're basically going to fall down even further, right? So it's this type of thinking that is paramount to AriasWave, and it's something very predictable, something that you can follow along, and something that I'll be updating you with basically from now on. Because until we hit a bottom, what's the point in hodling, right? You can't really hodl right now, but if you find a way to short the market and it works for you, then you have something to do instead of just sitting on the sidelines, twiddling your thumbs, and investigating other cryptos which are potentially garbage, right? Now, what cryptos are garbage is very that's something you need to work out for yourself. But for me, the top 20 cryptos, top 20, 30, 40 cryptos, they're probably the best ones to look at this stage. That's not necessarily true unless you look at the pattern and you understand what the pattern is doing, right? If the pattern is looking kind of flaky and you're hearing some bad news about certain projects, I'd stay away from those. For me, the main ones are, like Bitcoin, Ethereum, obviously, XLM, XRP, obviously, I like those ones. ISO 20022 coins, utility tokens, and there's a whole bunch of gaming ones, and also DeFi projects. There's just a myriad of different options out there that they have some pretty decent use case, in terms of hodling. But in terms of pattern, you know, trading and price prediction on the short term, there's no reason why you can't learn how to do that. And I'm going to be showing you how this works over, the next few months, and we'll see how that goes. Okay, so at this point in time, will crypto break the high like Gareth Soloway says? Well, I doubt it, because that would mean that you'd be creating some weird ass pattern that doesn't exist, or you'd probably be thinking that this is going to go much further up than is probably expected. But if you think about it, none of this looks impulsive to the upside. It looks completely corrective. And once we go back to the lows, it's going to be pretty obvious to me that this is not going to go higher in terms of impulsiveness or any kind of bottom, right? So for me, it's going to be purely corrective. Any bounce will be corrective and will only prepare us for the moves ahead. So hopefully you found this video interesting and informative. Thank you for watching.